right now, it looks like the property sector and property shares, in fact, are cooling off. The worst performing sector in China is coming off its worst day in nearly a year. The Shanghai Property Index kicked off the week with a more than 6% tumble, and that's after the government took more steps to cool China's real estate market, and this time is targeting those people who want to buy their third homes, who now have a tougher time trying to get those mortgage loans. Deutsche Bank calls these the most draconian measures yet. And Goldman Sachs says that Chinese property stocks have faced, quote, high policy risk. Now, the declines for property stocks has spread to the broader mainland market, with the Shanghai Composite posting its biggest tumble in nearly a year. Let's get more on these property measures taking place in China and cross over to a home buyer. Our very own Steve Engle has landed back in Beijing. And Steve, when you hear Deutsche Bank calling these measures draconian, what does that mean? What are they looking at?
Well, I can give anecdotal evidence from Beijing here, Susan. The property that we live in is for sale. There was a flurry of agents and potential buyers coming to our doorbell, ringing our doorbell and coming into our house throughout last week. And then Saturday, must have been 7, 8 families seeing the apartment on Saturday. Then Sunday, nobody came by. And then on Monday, nobody even called, which was very rare for an agent not to even call. So there are definitely these measures released over the weekend spooking potential buyers, at least for now. Now, there are local media reports as well of panic selling among some owners of 2 or 3 homes. And as Ma Jun of Deutsche Bank said, he expects prices to fall by as much as 20% in the mid to luxury range of apartments in the coming months. Also, he expects sales transaction volumes to perhaps be cut in half. Many economists expect further measures as well to cool the market after previous directives failed to slow gains in housing prices. Of course, we had reserve ratio requirements upped at banks. That didn't quite do it, but now we're having more pointed, targeted administrative measures at the buyers, not necessarily at the banks. Of course, prices rose at a record 11.7% in March. All this being said, Susan, Chris Ruffle over at Martin Currie says China's property stocks, to him, look more attractive now after these administrative measures because it indicates that authorities are more inclined to use administrative measures instead of rate hikes, at least now for the time being. Now, the latest measures include, let's bring those up, no mortgages for third home purchases in cities that are deemed to have excessive price gains. Those are like Shanghai, Beijing, Shenzhen, and others. Down payments for second homes also been increased from 40% to 50%. So you're going to have to come up with more cash if you want a second or third home. This, again, to limit speculation. Also, non-residents of these cities are going to find it more difficult to get loans from banks without tax returns or proof of Social Security contributions to those cities. Now, this could hit places like Beijing here, which has seen a flood of outside investors buying up apartments. Susan?
Yeah, so maybe we'll actually see the implementation of that controversial property tax then, Steve.
Yeah, that's something that the National People's Congress thought about debating this year on a national level. It was tabled perhaps for years down the road, but local municipalities may start introducing that. This, according to the China Times, reporting that China may soon start trials of a tax on property transactions, which would be first imposed on luxury home transactions. And the paper saying Chongqing already has been asked to prepare a tax on such sales. And the city of Jinan also cited as a potential city to implement a tax, and Shanghai, too, reportedly considering taxing individuals who own multiple properties.